Wanted to make a quick video on this really solid trade setup that happened in the PM session today, November 14th. And I just wanted to walk through why it's important to always have your key levels marked out on your charts to understand where your higher probability setups will present themselves. So let's dive into the charts and look at this setup. So if we
The
zoom
market
out,
is closed.
take two. So if we zoom out to the 1 hour chart, we can see that we're in this large So if we zoom out to the 1 hour chart, we can see that since Wednesday, if we zoom out to the 1 hour chart, we can see that since Wednesday of this week, we've been in this large selling and bearish trend. What we're going to want to do here is draw our Fibonacci tool from the high to the low to understand where we'll see, potential resistance, because we've had a strong bullish move today. But if we draw out our Fibonacci tool, we can see that our discount level is resting right here. And we can speculate that we'll see resistance at this level since we have this large selling range right here. So then if we jump down into the smaller time frames, we can see that on the 5-minute chart, when we came up here in the afternoon, we saw some initial resistance here. You can see that we saw a sell-off. So there's still sellers present here. So what I was looking for, was a pullback into our discount range again. You can see here we pulled back into our discount range and swept some sell side liquidity. And if we go down to the 1-minute chart, we can see that we established a range right here at our discount level, and then price manipulated up and took out the high of that range. And then we have this bearish engulfing candle, and that's basically your signal to take it short. So take it short there, put your stop above the high. We zoom back out. You can target new lows. And, you would be comfortable taking that trade because we are at, the discount level from our bearish range that we've established since Wednesday of this week. So it's just important to, have your key levels marked out so you can understand where, if you're playing longs, where your potential targets are going to be, and to predict or speculate potential reversals that will happen. Because as you can see here, once we got up into our 50% range, we saw a lot of resistance at this level. And there was a really solid trade in the PM session that you could have taken following that resistance, or speculating that there would be continued selling from that level. So anyway, it's just important to understand where your key levels are at, and just always be marking them out, and just understanding where you are at in your ranges and on the higher time frames.